Hey everybody, this is Lorelia and welcome. Thank you for joining me. And I'm kind of thrown off because I'm doing a few things at one time, trying to get Zoom going and this YouTube Live. This is new for me. I'm doing these Zooms to be able to push out content and kind of share what's been going on during these times of national pandemic. And the purpose of my video today is where is the money? So for the past, I'd say few weeks, one thing that I could say, I've been on top of it in regards to the funding that the SBA was putting out. And so now we're pretty much at the end of the funding. And so the Treasury is well, along with the SBA, have said that the money is gone. The money is over. Appropriations are not being given out. And so you have these people who are saying, well, what happened to the small business owner? The small business owner, got left out. And, a lot of people may not like my messaging with this video, but I really don't feel like the small business owner got left out. What I saw, and of course, this doesn't, my opinion on it does not relate to all the millions or thousands of business owners who were left out there. But I do believe that some people, when they wanted to go and get the funding, they just didn't know where to start. And I think the reason why is because many people say, well, how is it that the big businesses, got the funding? How is it that the Ruth Chris's of the world, or, those with, that have millions of dollars in revenue were able to get the funding, but the small mom and pop business owner was not? Even here locally, with a few individuals that I know, many people feel like, oh, well, if you didn't have payroll for employees, you got left out. And I don't think that's the case. And that's what I'm going to point out in this video. And I'm also going to talk about what the title of this video is about, economic stimulus for the wealthy, follow the money. And the reason why I want to say follow the money, and one may say, well, why would I follow the money if I'm not the wealthy? Well, it goes back to what I said. A lot of us, really don't have, number one, advisors to assist them when situations like this come about. You'll be surprised how many people reached out to me just looking for help in regards to the assistance with filling out the payroll protection paperwork, or just trying to understand it. And, one may say, well, you know what? All you had to do was submit the information, to the bank. And depending on where you are in the country, a lot of people didn't have the luxury to go into the bank that they bank with and sit with a bank representative. I know right here in the state of New Jersey, with the pandemic, hitting this state really hard, individuals, not even individuals, but the pandemic hitting the state hard, banks have been closed. They've been closed since, I want to say, for about a month now, since I think March 16th, 17th, something like that. So for a whole month. So if you were a business owner here in New Jersey, and as well as New York, and you needed assistance with processing the paperwork, you were kind of left for a loop. And so I want to talk about why now more than ever financial education is important. Following the money is important. It's so important, because if you are not plugged into the right resources, especially if you're not the type who knows how to go and research information, you're going to be left out. And that's really what I think what happened to a lot of people, especially those business owners who may have just been a sole proprietor, who may have just been a freelancer, who may have just been an independent contractor. Because the one thing that really, what really took a lot of people from the loop, if they were part of the gig economy, was that they couldn't go to unemployment. Now, I can't speak for a lot of states because unemployment is more of a state issue, but I know right here in New Jersey, if you were an independent contractor, part of the gig economy, those are freelancers, the Uber Eats, Uber, DoorDash, any of those freelancing type gigs. And that is how you earn your money. If that's how you earn your money for a living, key thing, if you were a 1099 person, how were you going to get access to the money that was needed in order for you to get some of that economic relief? And the one thing that I think what it boiled down to is really people not getting the proper advisement. So I want to point some things out, and one may say, okay, I am looking at some of the questions and there's a delay. So big hearts, get healthy. I need a financial education. Please get me started. Okay, so please continue to watch this video, and I'm going to point some things out. So I'm going to share my screen, and I'm going to show some things where people miss the mark. And then I'm going to go into, follow the money in regards to wealth. Okay. I guess I should have had this. Okay, so basically what I'm looking at, if you could see my screen, is I am looking at, this is a document from the treasury.gov. And I don't want to, the reason why I want to keep it here, and if you see right here on the top where it says hometreasury.gov, that is where you will be able to find this document, and I'll show you. But I want to really point out how individuals really kind of, miss the mark in terms of not being able to follow the money. Now, why do I say follow the money? Is because individuals who got their big share of the money are in the position to hire the right advisors to advise their company on how to get a big share of the money. The reason why the small business owner or was unable to get access to the money, because one, they don't have advisors, or they don't have a trusted relationship with the advisor, or they didn't know where to look and get the money. So if you see my screen right in front of me, now I know one may say, but why are we still talking about the PPP program? We can't even get the money. You'll understand once I point all this out. Now, right here, one of the biggest things that were talked about in the video, I mean, not in the video, in regards to the PPP, is that self-employed individuals were unable to get the money. So if you see right here, and this is the actual document, that was created by the treasury.gov, they outline how small business owners were able to get their share of the money. Now, remind you, this was posted April 3rd. They just said money ran out just this past week that passed. One second. Is that upstairs? Is the phone upstairs? Yeah. Okay. And so with that being said, if you look right here, it says individuals with self-employed income who file a 1040 Schedule C. Now, One may say, well, Aurelia, why do I need to know this now? Why do I need to look at this now when the PPP program is now over? It's because I can't stress enough. This is why I want to show you why you want to follow the money, because there are new opportunities that are on the horizon that are going on now that the media is not talking about. And only certain places are mentioning these things. And I don't want people to be overwhelmed by what they didn't get and start to position themselves to get what they can get because the wealthy is doing it. So that's what I want to talk about. So that's the reason why I'm talking about the PPP program. So it says individuals with self-employed income who filed a 1040 Schedule C. Now, this document that was created by the Treasury, they say you are eligible for a PPP loan if you were in operation February the 15th, 2020, and it goes into self-employed income such as independent contractor or sole proprietor. Who would that be? That would be those individuals who were part of the gig economy, the 1099 folks. But see, what happens is that many of those individuals don't have advisors, or they may be a small business owner and they still don't have those advisors. So then they didn't even know where to start to get their lion's share of the money. Because I am currently in a group now on Facebook, and it's a CARES group that talks about how individuals would be able to get their share of the money. And you would be so surprised how so many people on a daily basis were confused with, I'm a small business owner. I don't have any employees. How do I get the access to the money? I'm a 1099 person. I don't have no employees. How can I get my share of the money? This document is not a new document. It was, as you can see, the dates show as of April to the 3rd. It says sole proprietor or your principal place of residence in the United States, you file a 1040 Schedule C for 1099. Now it goes into if your partnership, why you're unable to get the loan, but wait, I'm going to talk about that. Now it says that if you're a partnership, you were unable to get the loan, and it goes into the filing the taxes for partnerships. And I'm just going to skim over this because I'm going to get to that later. But I really want to get down here about how do I calculate the maximum amount I can borrow and what documentation is required. Now, how you calculate your maximum loan amount depends upon whether or not you employ other individuals. Now, if you feel like, no, I'm part of the gig economy, it's just me, I don't employ nobody, disregard that. If you have no employees, remember, I'm a 1099 person, I have no employees, but I file a Schedule C. You have no employees, the following methodology should be used to calculate the maximum loan amount. Find your 2019 IRS 1040 Schedule C. Line 31, net profit. If you have not filed your 2019 return, fill it out and complete the value. If this amount is over 100,000, you have to reduce it. So you were only capped at 100,000. So if you made more, you had to cap it. If this amount is 0 or less, you are not eligible. What does that mean? Now, this is the part that I cannot stress enough, is that as you can see in black and white, the PPP program was not for individuals who didn't show a profit in their business. And for really a whole year, I've been talking about your business positioning, your ability to get business funding. and how your ability to get business funding is based on how you position your business. So if you positioned your business all year long in 2019, at the end of the year, I'm just going to write stuff off, write stuff off, write stuff off, and claim a loss, then you couldn't get no money. So that's the one thing that I want to stress. Many people lost out is because they never wanted to show a profit. They never wanted to pay taxes on their money. I'm not one to say paying taxes, is it right or is it wrong? But in regards to you wanting to get your share of the PPP loan program, was all based on your business positioning. Now I'm going to go down further and show you. Calculate the average net profit amount. Divide the amount by step 1 by 12. What does that mean? 100,000 divided by 12. What is that? About 83333. Multiply the average monthly net profit by step 2. And then, of course, then it says if you had got it the economic injury disaster loan advance made between January and April, you had to add that back in because it's going to get refinanced. So what do I mean? Like, why am I talking about this calculation, even though the PPP money is exhausted and you can't no longer get the money? Is because I want you to follow the money, because all the information was here. I did videos on it, because there was a lot of misinformation. But people felt like because they didn't have employees, because they wasn't processing payroll, they couldn't get their share of the money. Because remember, your PPP calculation, if you were a 1099 person or a sole proprietor, was based on the profit that you brought into your business, because it wasn't based on the calculation of what the Ruth Chris's of the country had. What do I mean by the Ruth Chris's of the country? Many people have said, oh, big business were the only ones who were able to benefit because they had payroll. And so it was based on how much payroll was processed for the month. Now, one may say, well, banks really were deciding on who they wanted to give the money to and who they, and you know what, that's really debatable. I mean, really can't say. I just feel like the fact that many individuals, and this is only what I've seen by people who have reached out to me and what I've seen in this CARES group, is that those who were on the lower spectrum of business really didn't know where to start. Like, they didn't know that this document existed, and to say, well, I know I can get my share of money, so when it was time to present their information to the bank, okay, the bank is saying they need payroll reports, but I don't have no payroll reports because I'm not pushing, I don't have any payroll. Now, if you go further down this is the calculation if you have employees. The following methodology should be used to calculate your maximum loan amount. Now, I just want to go to the back button on this document to show you where I'm reading it. And as you can see, it's the U.S. Treasury website. So the information was already here. It was already here. These were the documents that a person could read. Now, I know I said a lot, and I want to go into the topic at hand about following the wealthy. So the New York Post posted an article. Over 43,000 U.S. millionaires will get stimulus averaging 1.6 million each. The wealthy was not worried about the SBA funding. Now, one may say, well, that's a lie, Lorelia, because Ruth Chris went and got their money. No control, my friend. Ruth Chris, the corporation, went and got the SBA funding. Ruth Chris, the corporation. But the person who owns Ruth Chris, whoever the owner is going to be in this pool of the money. Now, I saw this article on the New York Post, April 16th. That was 2 days ago. ABC also posted an article similar. Tax provisions and corona stimulus will mostly benefit the wealthy. And this is one tax code change. One tax code change in the coronavirus stimulus law could help rich Americans. Now, I just want to read what this is. You can go and Google and find this article. This is the title of it. Tax provisions and coronavirus stimulus will mostly benefit the wealthy. One tax provision in the $2.2 trillion coronavirus stimulus package will overwhelmingly benefit wealthy Americans, according to the nonpartisan congressional analysis. The measure allows taxpayers to use losses from certain businesses to reduce taxes owed on non-business income, such as profits and investments. I want you to hear that again. The measure allows taxpayers to use losses from certain businesses to reduce taxes owed on non-business income, such as profits from investments. Let me explain this to you in layman's terms. Many of the wealthy, and one may say, well, I don't really know why I should know all this. I'm not the wealthy. And I really don't think that's the case. The reason why is because the tax code that is put in place for the United States allow all of us to take advantage of it. You may not write off big things like the ultra wealthy. You may not have millions of dollars in capital gains and capital losses, but understand the highest tax bracket is the tax bracket. When you look at your 1040, is taxes on earned income. That's that first line, wages. So a person, the tax code has always benefited the wealthy. It was never to benefit, I should say, the working person. So when you look at line 7 of the 1040, wages is the highest tax bracket. Now within that, I'm not going to go through each line, but there's a line for dividend income. There's a line for interest income. There's a line for capital gains and losses. Now, why do I want to concentrate on those things? Because I'm going to point out what this line means. Those who understand and diversify their investments, they have 1099-Bs, or what they're called, where they earn dividend income, interest income, and of course income on capital gains and losses. If they sold any stocks or any type of and it doesn't have to just be stocks. And I hope I'm not losing some people. Okay. Thank you, Big Hearts. Get healthy. For that comment. The point that I was making here, those 3 areas of dividend income, interest income, and capital gains, and that's what I'm saying. Capital gains, a lot of times when people hear that, they think about stocks, but there's also capital gains that occur in real estate. There are capital gains that occur with the sale of a business. There are capital gains for other things in terms of business that is taxable. Well, that line right there, if I continue going on, it says roughly 80% of the benefits of the provision will go to roughly 43,000 taxpayers. So the IRS is saying there's over 43,000 people in this country who earned over $1 million a year. I'm just going down because it's something, I think it's in this article. It may be the New York Post one. Okay, let me go back to the New York Post one. Okay, it is the New York Post one. So that statement that I mentioned right here about the measure allows taxpayers to use losses from certain businesses to reduce taxes owed on non-business income, such as profits and investments. If I go over to the New York Post article, it said that the Coronavirus Aid Relief Economic Security CARES Act trumpeted its existence for working families and small businesses. So basically what they're saying is that, working families and small businesses, it was something, but wasn't no big thing. But it apparently contains an even bigger benefit for the wealthy business owners, the committee found. So it's like, yeah, the CARES Act gave something to the working person and the mid-size and the small and the mid-sized business, but it's really going to benefit the wealthy. Like the wealthy are going to get their lion's share. This is why they're going to get their lion's share. Keep in mind what I told you, and the act allows pass-through businesses once taxed under individual income rather than corporate, an unlimited amount of deductions against their non-business income. Do you hear that? Unlimited amount. Unlimited amount. The wealthy have said, thank you. Thank you. Because they understand that although interest income, dividend income, capital gains is in the highest tax bracket in regards to taxes, that pass-through business that they own, because the wealthy own many businesses, that pass-through business, if you're not familiar, are usually businesses that are taxed as either a partnership or a S Corp, and they get what's called K-1s. And the K-1s are given to individuals who are part of a partnership or S Corp, so their taxes can be, so they can be taxed on an individual basis. What do I mean? What do I mean by that? I want to just speak from layman's terms so people can understand me from as if I'm speaking kindergarten. Remember I said that people think Ruth Chris Corporation got their big lion's share of the money? No, the big lion's share of the money are the people who sit, the wealthy people who sit on the board of the Ruth Chris Corporation. Because we know anybody who's sitting on that board, they're not struggling. They're not struggling. So those people are what this is probably they're probably part of the 43,000 American millionaires. And they have interest in different type of industries where they get to benefit from this, because they know that a large portion of their income may get taxed, but now they have a pass-through tax entity that's going to wipe all that out. So let me look at the comments. I think you. Well, Care Bear, let me let me share with you. If you watch the beginning of this video, I am telling people why they need to take advantage and follow the money. And this is the reason why I'm telling people to follow the money. because most people are caught up in the conversation of, oh, woe is me, we didn't get our lion's share. And I'm saying the lion's share, this is the lion's share that we all can take a part of, that we all, because remember, the tax code is for everyone in this country. It's not for different segments of income class. Don't get me wrong. Write-offs are write-offs, whether it's a small write-off or a large write-off, but there's not like the tax code says, unless you make this amount of money, you can't get this tax write-off. That's not it. That's not it. So that's why I'm showing people that this is where we need to be concentrating if we want to take part in this whole wealth shift that is going on, because that's really what is happening. The cheese is moving, and how the moving pieces on the chessboard is being played out. We need to keep our eyes on it, because we all can benefit from a lot of these things. Because now you hear a lot of people talking about investing in stocks. And although that's good, but understand that a lot of times at the end of the year, you may have earned some interest income on it, you may earn some dividend income on it, and if you buy and sell stocks, the ones that you may have a capital gain on, now you have the ability of how you can write it off. If you have a business that is a pass-through entity. Now, although the article didn't go into what types of businesses are pass-through entities, but one of the most common are real estate. Now, of course, any business can be a pass-through. One of the most common is real estate. And so that is why I've been telling people, now is not the time to run scared. This is not the time to run scared. This is the time to really get your ducks in order. Because what I've noticed is that businesses that are not running their business like a functioning business, when breaks like this come with, whether it's the economic stimulus with the CARES Act for business owners, or whether it's now tax laws like this that's part of the CARES Act, unless your business is positioned right, you won't get your share. And I know that for certain. Okay, so Michelle Forrester brought up a really good point. She said, how can an employed person with earned income win in this system? Well, unfortunately, that's the whole point, Michelle, and that's a good point. The only way an earned income person can win based on what I'm talking about now, he or she need to have a business. That is the thing. He or she needs to have a side business that is taxed to be a pass-through entity. And I just want to put a disclaimer out there. I'm not giving tax advice, but understand, whether the CARES Act was put out or not, the tax law was never created to benefit the earned income person. Because Michelle asked about the earned income person. The earned income person is a person who work a job. And unfortunately, all the great tax deductions, wealth building strategies come from having some type of business outside of your job. So that is the only way a person would be able to benefit. Yeah, so I'm glad you're getting a big heart to get healthy. Okay, so Michelle, you asked, well, what type of business is a pass-through entity? That's not real estate. Any business can be a pass-through business, but it's just with how it's structured, because most pass-through entities are either taxed as a partnership or taxed as an S corp. The thing is that so without really going into, you know, the tax ramifications, close that door, the tax ramifications, it's not really the type of business, it's how it's taxed. So the benefits come with how it's taxed, not the type of. Don't get me wrong, there may be some particular write-offs that may benefit one industry over the other, but the big point that I'm making, Michelle, is not the industry, but really the tax basis. Because understand what I'm saying. The advantages that I'm pointing out in this article from the Corona's Aid Relief, the CARES Act, is it says, if you see the article, the act allows pass-through businesses once taxed under the individual income rather than the corporate, an unlimited amount of deductions. So it's the type of entity, tax entity, it's not the industry. So it's not saying that certain industries will benefit. It's how it's taxed. That's why your tax structure really means a lot. You know, there is a reason why, you know, those who earn a certain income are taxed, you know, run their businesses taxed a certain way, because it goes back to what I originally talked about. They have advisors, and the advisors are the ones who tell them that if your business is structured like this is what you will pay taxes on, you know, not to really, you know, I'm going to use the example that we hear a lot right now. A lot of people always say, well, why is it that President Trump will not show his tax return? And those who say they know what it looks like. I think one time it was put out there, I remember even coming across it, and he had a big loss. And it was not that he was doing anything illegal. I mean, I never audited his tax return, but individuals like Donald Trump, as well as a lot of ultra wealthy people, the Bezos of the world of Amazon, is that they're leveraging the tax system. Because remember, the tax system was created for the wealthy, was not created for the earned income person. Exactly. Tweezy's 1976 says, yeah, they have trust accounts. Trust accounts, once again, you know, they are pass-through entity. That's a 1041. The 1041 creates what's called K1s. The K1s are based on those who are part of the trust. So the trust may be Johnson Trust. Who's part of the trust? Amy's part of it, John's part of it, and Pam. Each one of those individuals get taxed. The trust doesn't get taxed, the actual individual. But now with this and you know, put into effect, the trust may want to show a loss, because now all those losses will be distributed between Amy, John, and Pam. And when they get their K1, they file their taxes on the individual level, they get to write that off if Amy, John, or Pam have a job. Yeah, I'm glad you. Okay, so another question was, I read a lot of businesses getting denied of the EIDL loan grant. Yeah, you know, that's what they said. You know, I mean, understand, DC, you know, you mentioned about the EIDL because of bad credit. A lot of people look at the EIDL as free lunch. So I even did a video on it, and I talked about it was a grant and it was forgivable. But you got to understand, the SBA has always had a history of when it comes to loans, looking at your credit. So the fact that they looked at individuals' credit, it doesn't surprise me, because they are known to do that. That is what they've always did. They always look at credit. So that didn't surprise me. I think a lot of those individuals who thought that kind of looked at the EIDL grant as free lunch. Okay, another question. This was how do you set your business up correctly to win in the US tax system? Well, like I said, without giving tax advice, well, that is why you have advisors, you know. And that is a question that you speak to with your tax advisor. You know, what is the best tax structure for me to take advantage of some of the great benefits that the tax system rewards individuals. And I understand not everybody specializes with understanding that. You know, no shade on tax preparers, but some people, that's all they do. They just prepare taxes. So what does that mean? You know, and I can only speak from this place, although I'm not I'm not currently running a tax practice, but my background is in that. I have a degree in accounting. I've worked with some of the top CPA firms, you know, licensed accountant. I know about that. I don't currently do it now, but what I do know that a lot of people who use the term as a tax person, that's all they do. They just really file taxes. You got a W-2, boom, they file your taxes. But when it comes to understanding the tax laws that can benefit you financially, that may not be what they do. Why? Because they may have a client base who really don't have a need to understand all that stuff, because a lot of those individuals just want a W-2 prepared and they want a refund. You see what I'm saying? Not to throw any shade at, you know, the H&R Blocks of the world or the Jackson Hewitts, but those individuals are just individuals who just looking, you know, to get their taxes filed, because they rely on a refund check. And you know, the refund check is, you know, that's a big win for them. What they don't understand, a lot of those individuals, is that only thing the government did was give you a tax-free loan. What the government did was it was like a tax, not loan, a tax-free savings account. So what that means when people get big refunds, that just means is I can't save my money. So what I'm going to do is I'm going to tell the government, take a lot of my money on every paycheck, and then at the end of the year, give me a big refund, because I don't have the control and the discipline to save my money. So I want the government to do it. But guess what? Although the government gives me a really big refund, I don't earn no interest on it. So that's why I say it's an interest-free, and please understand, correct me, I said an interest-free loan. Not that it's a loan, it's just a big interest-free savings account. What is a simple business that someone who is always in a job can start to begin with to learn? No one teaches in school. Yeah, exactly. I mean, I don't really want to say, because it simple is very, although a very, it's so broad. Like you know, one may say what could be simple for me, it may not be simple for another person. So, you know, I'm very cautious when the term simple, because it has to be defined at what would you consider simple. I mean, the best way to start would be what do you enjoy doing? But understand, it goes back to, if you want to benefit from the pass-through system, pass-through business entities, you got to understand one of the pass-through entities is a partnership. Partnership means partner, meaning me and another person, or me and several people. So if it's just myself, I can't partner with myself. So I already know that that tax structure is off the table. But I can be an S corp, and the S corp does create a pass through, is a pass through entity as well. But it is taxed on, self-employed income is taxed on it. And that's what I said, I really don't want to get too technical, but simple is really, it's hard to say, because what could be simple for me may not be simple for you. What could be simple for you, it may not be simple for me. Yeah. So I'm glad that you did enjoy the questions. Let me see what else. Okay, I talked about the trust accounts. Okay, so I know there's a delay. So yeah, so that is why, I'm saying, okay, I see one just popped up. Exactly. So see, that's that, DC said, he found out that his LLC would benefit better if he was an S corp. Now, one of the things is that, and this is what, confusion come with, is that a lot of people don't know that LLCs can be taxed many ways. So it sounds like, based on what, DC says, is that he found out when he had his taxes done, he would have been better being an S corp than an LLC, but not knowing that an LLC could be taxed as an S corp. I have one. My real estate business, it is an LLC, but it's taxed as an S corp. So understand that. So LLCs could be taxed as a single member. Sounds like what DC is saying. He was a single member. They could be taxed as a partnership, which is a 1065, and they could be taxed as a 1120 as an S corp. So there you have it. So understand, LLC is a very broad term, and and that was one of the things that, even when I myself was a tax preparer, a lot of times, people get information and they do stuff themselves. It goes back to what I originally talked about. Why a lot of people weren't able to benefit from the PPP program is they don't have advisors. So what happens is, don't get me wrong, great information is good, but sometimes you do need a sounding board to be able to say, okay, is this really good advisement? Like, what could have happened was, what DC could have did was created the LLC, no, not create, but considered it, and had his tax professional talk to the tax professional about it, and tax professional probably could have gave them some advice on if that was the best thing for them to do. Okay, so okay, so I don't know how to explain it, but okay. So like, what do you mean that all right, Big Hearts Get Healthy said, how can an LLC be taxed as an S corp? Explain. If I'm understanding that question, an LLC is not only taxed one way. What's widely, a lot of people, when they hear LLC, they may think of it being a single member LLC. That means I'm a single member LLC, and that person files a Schedule C tax return, which is part of the 1040. Okay, the question, what this is what I'm gonna say, and I'm not gonna put words in your mouth, but I'm gonna say the best way to understand that, why would a person want to be an LLC as a, why would they want to be an LLC and taxed as a corporation? It all boils down to the tax benefits and also the legal benefits of the LLC, in terms of me being able to add other individuals into the LLC, because the LLC talks about the legal structure of the business. Legally, how can the business be ran? Because remember, every LLC should have together a document that talks about how do you run the actual entity. The S corp portion of it is just how it's taxed. So you will be surprised how a lot of people have LLCs and have no idea how it's taxed. Now, most people may end up defaulting where it will be a single member, because what a lot of people don't understand is that you have to do an added step to get it taxed as a corporate S corp. So when you go apply for being an LLC, when you fill out the EIN paperwork or whatever, and you get the okay, you still got to go back to your IRS to get the designation of an S corp. And the same way on the state level, you still got to go to the state and say, from where I'm at, New Jersey, and say, hey, I want to be taxed as an S corporation. because it goes, I want the best of both worlds. I want the best of both worlds with how I'm taxed. And then I also want all the legal benefits in terms of the entity on the LLC. So it goes back to, you know, I'm playing chess. So I want all the benefits. I want all the benefits. So that's why I want it taxed a certain way, especially in regards to real estate, you know, because there's a lot of particular write-offs and, you know, and things that I can do on an S corp level that I can't do on an LLC single member level. Just can't do them. Those write-offs that are for S corps are not there for single members. So that's why I did it. So you said you have an LLC, but what kind, how is it taxed? Yeah. So Michelle, so you said, how do you know what advisor to trust in? Okay, so trust is based on what you would consider trust. Like everyone has their own basis. It's a person not telling me to do things illegal. Do they have my best interest at in state? DC posted on here, person should be local. That may be something that you want. Some people do want a local person. Local person. What's the advantage of a local person? Well, that person would be really abreast of the state laws of that state. Unless the person is part of a very large practice. Like I know for me personally, I probably wouldn't want a CPA who, is in another state if they are a sole proprietor. The reason why is because every state is taxed a different way. Even with New York being right next to New Jersey, the laws of New York are totally different than New Jersey. And unless it's a very large practice where they can hire people and say, okay, you stay abreast of all the tax laws in California, you stay abreast of all the tax laws in New Jersey, there may be some things that you may miss out on if you are not if that CPA is not familiar with the laws of your state, because no sole CPA who's the sole proprietor can know all the tax advantages in every state. Now he or she may know the advantages within the federal government, because understand those federal laws pertain to every state. But when it comes to the individual state, they may not. So I would also, who was that who said that? I think it was DC who said use a local person. So those may be, that may be something to consider. It's because I want to make sure that I'm getting everything fairly on my state level. Like they know all the things that my state, case in point, even with all the CARES Act, the SBA funding, here in New Jersey, and as well as other states may as well, I don't know. In New Jersey, they had their own pool of money on how they were helping business owners. So I did videos just on the benefits of the economic stimulus for the state of New Jersey. But if a person was living in Illinois, they wouldn't care nothing about that video, because that video didn't benefit people in Illinois. It only that video was particularly for those who lived in the state of New Jersey. So right then and there, that is one of the advantages of why you will work with a local person. Now, in terms of being charged fairly, I'm a big proponent of the person fees or their fees. So if you want a certain level of advisement, understand the fees probably are going to be what they are, because it goes back to the H&R Block versus the CPA. The H&R Block is just a person who took a 6-week course, or maybe not even at a 3-week course, and they know how to, look at certain things that's part of the tax return. Because a lot of those H&R Block people probably have 1 or 2 W-2s at most. Maybe you get some gig economy folks, 1099s, but they're only looking at certain things on the tax return, as opposed to a person who's a licensed accountant. He or she has professional credits that they have to fulfill. So they always try to stay up on, on the laws of accounting. The H&R Block person, they just there for the season. Like, I'm here. I was told I can earn some extra money for paying taxes, and that's why I'm here. But they're not looking to further their education outside of what's there after there after the tax season. Making sure I get all the questions. Okay, Big Heart Get Healthy just started my first year. You never said a Big Heart Get Healthy how you were taxed. I know you said you have an LLC, and once again, I'm just going to assume that you're probably single member, because like I said, a lot of LLCs, and the IRS says this, is that if you don't make the designation, they're going to default you and whatever they, as a single member. So you're going to get an automatic default. So unless you give that designation, like me, I created an LLC, but I wanted to be taxed as. So, I had to give the designation, because if not, they would have automatically. Okay, so she said single member. And also Michelle Forrester mentioned about, do I have classes? And I'm glad you mentioned that. Yes, I do. I'm currently going to be doing a class starting. I'm kicking it off next week. And it's going to be talking about getting everything in order in terms of, your business. And so these are some of the things that we're going to talk about. How are you set up? Because the one thing that I do a lot on this channel is I talk about a lot about credit. I talk about business funding. And what I notice is that people just not set up like that. So we're going to talk about the things that a lot of people they don't want to do. They kind of just, especially when it comes to money, like we saw with the PPP program, people just wanted the money, but they weren't even set up correctly. They weren't even set up correctly to win. And I went over that in the early part of this video. If you're watching it live, you can't catch it now, but watch the replay. I went into how the PPP program went into. The documents stated how gig economy folks, 1099 individuals, even those who are on this live now, those single member LLCs, if you were a single member LLC, how you could have gotten your lion's share of the money. But if you claiming a loss for 2019, you was already out. You was already out. They weren't giving you no money. So that's what the class is going to be about. It's about getting your stuff structured, putting it in order, to be able to get your lion's share of what's ahead. Because after this whole, Big Hearts Get Healthy, how do you sign up? The best way to sign up now is email me. The information may be below this video, but email me. If you get on my email communication list, go to thiscredit.yourmoneymentor.com. That will put you on my email communication list. And then once you get on it, you'll see my emails. You'll get my emails on the information, because this class is only going to be for those who are interested. So I know people who are on my email communication list are those who are interested, or you can reach out to me by email, lorilliabp@gmail.com. The one thing that I can't stress enough, though, you got to get on the class live, because this is what I know I'm going to do, is that after the class is over, once the class is over, please post it, is that I will sell it as an information product, but it's going to be at a higher price. So what would be the advantages of you getting in early, getting it live? One, you get to ask me questions in a private setting. that we can go over, because if you get the info product, you know, it's just going to be the information there. Um, yeah, I if you go to, because see, I'm doing this live, so I won't be able to post it now. But underneath this video, there'll be some links. So you can click on the link now. And like I said, you'll be on my email communication list to learn more. So go to bizcredit .yourmoneymentor.com or email me at lariliabp.gmail.com, because this is the stuff that's going to be coming down the pipeline. And you want to make sure that you're set up to get your lion's share, because that's what I'm noticing, is that a lot of people just aren't set up properly. So I am glad that this, I'm glad to do this topic. I'm going to be talking more about, thank you, Michelle, and as well as those who are watching, to stay tuned in, plugged in. Thank you, DC even noticed it. I'm glad to hear that, DC. He said everything you were preaching for the last year came to fruition. See, DC, no, I've been telling people to get their books in order for the longest. And nobody didn't want to hear what I was saying, because that stuff was not interested. See, people just wanted to go after the quick stuff. And as you notice, those who were looking for the quick stuff, now they looking like, you know, they're looking crazy because they can't get nothing. Yep. Yep, telling people to get they credit in order, and and exactly. So DC, he knows I've been saying the same thing, the importance, because this is what I know. When you are set up properly, no one can take that away from you. You see what I'm saying? Because that's the foundation. And then you just build on it. And so when things come down the pipeline, you can get your lion's share. And that's what DC noticed for the whole year. I've been saying that for about a year now, about the importance of having you getting your credit right, making sure your books is in order. Because what I'm noticing is that people want all the advantages of, oh, I want to take part of them tax advantages, but they ain't tax right. You know, people want to take advantages of all the funding, but they're not set up right. So they want all the coverings that come with, you know, what's available out there. But when they come down the pipeline, you can't get it. And see, this is the stuff ain't nobody talking about. You know, this is the stuff right here. That's why I told people when I did videos on the PPP, I told people that this is where I was going. If you wanted to stay abreast on what was going on with the CARES Act, I told people, go to the U.S. Department of Treasury website. I did the videos on it, you know, so people can't say I wasn't telling people. You know, I told people where to go. And that's the good thing with the classes that I've held in the past. I always tell people where they go. Unlike many other people, they won't tell people where to go. They want them to believe that the stuff is hidden under a rock. So I'm looking forward to working with those who are going to be part of the class. Um, and thank you for that, DC, for pointing that out, because a lot of times you say a lot of stuff, but when those who've been watching, you know, I've been saying the same thing for the whole year. This is somebody who knows, you know, nobody can ever take that away from you. Get your books in order, get everything in order. That's what we're going to be talking about with this upcoming class starting next week. So this is Larilia. The links will be below, bizcredit.yourmoneymentor.com, and you can email me at LORILIABP@gmail.com. Okay, I will see you in the next video. Thank you, and stay safe, and good night.